In particular, I found it interesting from the CFO when he said that they look at the numbers and found how, um, let's get Wolf up here. Uh, for every dollar they spend on S&M, they are having a magnificent ROI. And so they're going to continue to increase sales and marketing as long as that continues. So that was encouraging. That's because that's exactly what I personally want to see is that they start getting landing bigger and bigger deals, more and more enterprise customers. Enterprise customers were up 70% year over year. Massive number of new enterprises. So there is the validation that that S&M spend is resulting in customer lands. Exactly what I want to see from the sales force. But in particular, the biggest thing that stood out, cash flow from operations, free cash flow, moving more than 30 percentage points up and swinging cash flow from operations positive in a huge way from uh, cash flow margin was minus 15% to plus 17%. So massive swings in profit. The underlying cash flow margins equals operational leverage that I exactly want to see. So all around, really good numbers. Obviously, the market's reacting positively. Hopefully, we can regain what we lost today. Thus far, not quite, but so yeah.
And Muji, I just wanted to let you know real quick that I've got two different meetings going in each year, but we just started recording about a minute ago. So I'll have the recording for you.
Oh, okay. So it turns out we do have another listener recording as well, Deval.
Oh, okay.
So
Great to hear.
uh, appreciate you stepping in.
Absolutely. How could I miss it?
And we have Peter from Software Stack. How are you? Did you listen to Net's numbers, or were you on one of the many other calls? You might have been with David.
Ah, hey, Muji. Nice to see you and everybody. I listened in on Datadog. I knew Cloudflare was doing fine. I was eager to hear the update from the Datadog team, particularly because I think the story there is let's say changing more significantly for the positive, and I think there's an equally large opportunity in that space, which I could certainly talk about. But yeah, I was on the Datadog call.
Excellent. Any key takeaway from that
Yeah, I
call
think
before we move on?
for me, the story here, as everybody I think is familiar with, is Datadog kind of flatlined over the course of last year as we witnessed what appeared to be top line revenue growth deceleration, which all hinged on a kind of one time hit in Q2 of 2020. Um, and and since then, obviously, the stock's been kind of consolidating, if you will, and everyone's been waiting for revenue growth to pick back up. And this is one of those cases where it's important to pay attention to the sequential revenue growth versus the annual revenue growth. And what's becoming clear is that as we progress through 2021, that revenue growth is going to be reaccelerating. So while in Q1, I think they performed reasonably, putting up 51% annual revenue growth. If we really look to Q2, they raised guidance pretty significantly and or really established their estimate fairly significantly above what the market was expecting. And if you kind of extrapolate out, the magnitude of the Q1 beat and apply that to Q2, they could actually get into the 60% revenue growth range, which obviously is kind of a reacceleration from the 56% and 51% that we've seen in the last two quarters. Uh, Similarly, the CEO called out the fact that they raised the full year revenue growth from 38% to 47%. And in some ways, I think that's or in a lot of ways, that's, I think, another strong indicator of their confidence that they're going to get back to this kind of accelerated revenue growth, particularly when we've seen that annual revenue growth kind of be raised by 4 to 5%, each quarter in a typical kind of beat and raise, and for them to bump it up 9%, I thought was a strong statement. Other,
Fantastic.
non-revenue metrics, billings were up 59% year over year. Total RPO was up over 80%. Current RPO 60%. So all of those, would again support this notion of accelerating revenue growth. And they're doing that with, strong profitability as well. Free cash flow margin jumped up pretty significantly to around 20%. I thought that was strong. And then on the product side, the story I think everybody knows with Datadog is that they have just successfully continued to add these monetizable products to their offering, where, well, back in 2018, or, they started in 2017 with just infrastructure, then they added, logs and APM in 2018, then they added four more things in 2019, and then four more things in 2020, where now they're up to like 10 monetizable products. And what's interesting about that, which we don't necessarily see with other companies that take that strategy, is that they're seeing almost proportional and continuous growth along those product lines simply based on the magnitude of the growth, or the magnitude of the size is scales with the amount of time the product's been in market. So what they talked about is how even some of the newer products like NPM and synthetics are now showing um, run rates in the, I believe he said, 10-digit range. So that would be obviously over $10 million. And those are still relatively new. Those are both 2019 products. And the big headline metric for me, which I hadn't heard before, was that they said that now they have hundreds of customers who are using 6 out of 9 products. I hadn't heard that metric before. We're all familiar with the percentage of customers who are using, 2 or more products, 4 or more products. Those all continue to go up as well. But this new metric, hundreds of customers with using 6 out of 9 products, and actually now I think they have 10 products in GA. I thought was really interesting. So that tells me that this continuous addition of new products are being adopted, and that's going to continue to drive, dollar-based net expansion, which again was above 130% for this quarter. And at the same time, you said they're still seeing growth in even some of the older products like APM and logs, have the obviously highest ARR associated with them. But he said those are still in, well, using your term, hyper growth mode, and that was refreshing to hear as well. And I think the last thing I'll say, which was something that was announced earlier in the quarter, but I didn't see a lot of people call it out, is the move they made in the Gartner Magic Quadrant, which Olivier did call out on the call, which is Gartner. And if you all aren't familiar with it, Gartner's probably the most well-regarded industry analyst as it relates to ranking and evaluating technology products. They published their updated report for APM in Q1 of 2021. And what was interesting about that is that for the report they put out a year prior in 2020, they had Datadog just listed as a visionary in APM, which means it's kind of the second place quadrant. They moved in this year, they moved Datadog to the leader category for APM. And yet competitive offerings like Dynatrace, Splunk, and others didn't move in terms of their position. So I thought that was really significant as well, which Olivier called out, the fact that this industry analyst operation recognized that move, while sometimes we can be skeptical of the impact of those analyst reports. they are important, for CIOs and CTOs, generally at the more mainstream kind of Fortune, Global 2000 type companies that are looking for a solution. So for Datadog to have that kind of velocity in terms of their move is also pretty significant, particularly in the APM space. So those were my thoughts. I didn't really see anything negative, um, and they continue to add employees at a very fast clip too, which I feel like is a good indicator of growth potential as well. So I'll stop
Excellent. I mean, that's all incredibly encouraging. It sounds like the thesis that Peter and I had a space last quarter when they both announced numbers on the same time, and we kind of had the thesis at the time that Datadog is showing that recovery in its quarter over quarter based on that muted quarter a year ago, and so it just completely tracking to our thesis. So that's fantastic news all around.
Yeah,
So
I
thanks
mean,
for
in
all that.
terms of, sure, yeah, in terms of what's actionable, I mean, I had created, based on that conversation we had, I had created a fairly large position in Datadog. I think now it's like 18% of my port, and I'm actually happy I did that. Well, it's down a little bit, but I think it's going to play out well over the course of this year.
Excellent. So yeah, let's pivot back to a little Cloudflare. I think there's a couple of questions. Let's start with you, Nick. Did you have any questions or concerns or highlights that you saw in the numbers? Or maybe you're done speaking. But if you want, Nick, you can ask away. I think we lost Nick. So how about Paul? What'd you think of the quarter?
Awesome. Thanks, Muji. Really appreciate you putting this together. Unfortunately, I'm at work, so I haven't listened to the call yet. One of the things that I found encouraging is obviously the revenue acceleration, even though it was only 100 basis points. That's always nice to see. If I recall correctly, the first quarter guide was 43, and they printed a 51. And the second quarter guide, I think, is coming in at 45. So it looks like we could potentially see continued revenue acceleration. I think the Q2 of 20 was a 50% quarter as well. So we might, if that trend continues, that's a real positive. You did mention the S&M return. Did they give a magic number at all, or did they just give a qualitative information on that?
So no magic number, but they basically said that they have the insights, and this was the CFO speaking. All their metrics basically said that for every dollar of S&M spend that they were doing in hiring, this was a discussion about hiring, was having significant ROI. And so they're continuing along their trend of ramping up and kind of revamping their sales organization to be more geared towards, the CTO, CIO level. And that really goes with the breadth of their products and how they kind of sell it as a menu of items available on a platform. So they're, continuing with what they're doing and basically pointed out that that's driving the significant growth that you saw in the large customers, which again was 70% year-over-year growth in enterprise customers. So incredibly impressive there, and it also drove the net retention rate increase, which went up 4 percentage points quarter over quarter, or 6 percentage points year over year, is also driven by that upsell into large enterprises.
Yeah,
So all encouraging numbers there, that they're really tackling this kind of, and I'd say it is a shift in sales motion because they are such a kind of a DevOps platform, really engaged at the dev level for a lot of their, the pieces of their platform, it's really encouraging that they're shifting that to be able to sell into large enterprises.
Yeah, they've talked extensively in the past about the advantage they have in being able to invest in sales sort of behind demand based on their sort of delivery of their product. So, do you think they're actually making a strategic change to sort of get ahead of demand and get into the sort of C-suite level on some?
Absolutely. And there was some discussion of that on the call too, of how, these large enterprises are kind of stuck with these network hardware that really couldn't adapt to the change in how, their workers were going remote. And that's really leading the drive into cloud, and that enterprises, especially that C-suite level, are really impressed with the breadth of products within a single platform. That a company doesn't have to go to a separate vendor for bot management, a separate vendor for DDoS protection. That that it really appeals to those large enterprises to have such a wide platform that can really apply very specifically to their use case. And so it's pretty exciting to hear that.
Great. And I've got one final question, and then I'll jump off. And again, thank you so
Sure.
much. This is awesome. I assume they gave a workers uptick number in terms of sort of deployments. Any indication on terms of actual revenue contribution from workers?
No. And they're very clear. They're not interested in breaking out revenue by product, because they do see themselves as kind of this, holistic platform. So they're not breaking anything out. They didn't actually specify the exact developer count, which is pretty much the only vision we've got from management in terms of how much workers is used. However, they said it's basically the same kind of net new developers they saw in Q4, they also saw in Q1. So I think they're just seeing continued momentum, but we didn't really get any specific numbers this time.
Yeah, if I recall, the Q4 number was it 100,000, or am I making that up? I do remember them saying that 300 was their goal, but that's it. I'll have to go listen again. Thanks again.
Yeah, let me just see if I can go back in my notes here. I keep pretty extensive notes here. See if I can get what devs were. They said 50K new developers used workers last Q4.
Okay, then that
Probably
100K
the same here.
not right.
No. Great, Paul. Thanks for the questions. Who else wants to ask away? Or I could just randomly pick facts out here. No one's stepping up. And we lost Nick Gray. Let's go back to the numbers here. Let me just pull up my spreadsheet. I was inputting the numbers before the call. It is, steady as she goes at the top line. Pretty solidly 50% grower. A slightly less quarter over quarter, but nothing to be alarmed about. RPO had a significant jump. RPO accelerated growth from before. So it was 75% increase last quarter. It increased 88% this quarter. Gross profit grew 50%. OpEx grew a bit. Probably the net effect of their increasing in S&M hires. But OpEx is increasing. I don't typically break out which area of operations OpEx is in my numbers. Scrolling down, though, the most impressive thing was So first off, operating margins grew 10 percentage points. Actually slightly decreasing, the margin, slightly decreasing, but nothing to worry about there. They are adjusted net loss is also slightly increasing. Again, I think that's kind of the effect of increase in hiring. Cash flow from operations swung from negative 14 million to positive 23 million, a 32% percentage point shift. And free cash flow, same thing, a 32% shift in free cash flow margin. Very impressive. Immense signs of operational leverage kicking in. Same tracking path for employees. It's been 41% last quarter, 41% this quarter. Customer growth is been accelerated from last quarter. It was 35% last quarter. It was 46% this quarter. A 17% sequential gain in customers. That includes free customers. Actually missed the paid customer. Didn't quite make out what the CFO said. But enterprise customers, which are paid customers over 100K, grew 70% year over year. It was 57% last quarter. So massive acceleration of enterprise customers. Again, I think a testament to their increased spend in S&M with a focus on folks who, kind of at the all throughout the entirety of their sales organization with a background in enterprise sales. And you can see the results. They are selling this to enterprises. There's many Fortune 500 mentions of folks that were signing up for their platform, including mention of Workers, a financial firm that's using Workers, and I think the one thing he said about Workers, as far as like a real customer usage, is he says if you pull a credit report, you're probably pulling it from the edge. So all pretty interesting. Looks like we have some questions. Let's take one from Ernest here. Second here, let me get you all approved.
Not go through the revenue, but like a quick question on their enterprise growth. To me, a clear signal actually is, do they have like corresponding services revenue growth? That is like true enterprise growth. Otherwise, it's just like a couple of lucky deals here and there.
I guess I'm not quite sure what you mean. They don't break out services.
Okay.
Like a professional services,
Yeah,
you're
professional.
saying? Like the onboarding of customers?
Mm-hmm.
They don't break that out.
So
it's a single revenue line.
Okay.
And I'm not sure how much they charge. Certainly their product is built around ease of implementation. Although you would have to imagine, especially with enterprise sales, that you would need some hand-holding. So, I mean, it's a great question. I don't have much
It's usually not because the product needs the implementation. It's because enterprise need to plug it into their multiple workflows and systems, like third-party products and systems that you need to plug it. So that means you're kind of logged in. Like Datadog is like logged in. PagerDuty is logged in because large companies have like deeply integrated it into their product. It's gonna be somebody coming with Developer is not gonna replace them. They have to be like.
So sorry, breaking up a little bit. They certainly did mention lock-in. So the point he made on the call that CEO made is they are tracking the number of customers that have 4 or more modules within their platform, as they find that is the point where it really increases the stickiness of their platform. But they mentioned several Fortune 500 companies that are brand new that are immediately starting to develop on Workers, for instance. And you have to imagine that's pretty sticky because that's not a platform that they're going to easily find elsewhere at this point. So I think there is some
Yeah,
stickiness
yeah,
to their
that's good to
services for
know.
sure.
Yeah. I mean, because usually what happens, like when you kind of bring in a enterprise sales team, they do land deals. The key question is, does it's repeatable?
Sorry, Javed, you're really breaking up a lot. So thanks for the
Sorry,
question.
thank you.
How about the Twitter investors? Do you have a question?
Hey, I'm sorry about that. Can you hear me?
Yes.
It's kind of interesting because one of my really good friends actually just got a job at Cloudflare. He's a really great guy, and I was just going to ask to see what you thought about the overall kind of cybersecurity space and what you're seeing in terms of costs in terms of employee side, but also just is growth still there? And then also maybe you can speak to where like the best cities are still for cybersecurity stuff on that.
As far as like jobs go,
Correct. Yeah, or just yeah, maybe jobs or just places to be.
I can't really speak to that. I'm certainly not in that industry, so I'm not going to help you much with the job growth. As far as the cybersecurity space, I have talked about it extensively on my blog. And so, I do cover the zero trust space in particular. In fact, I just started a premium service with my blog, and that was the initial post today was all around zero trust and the kind of the ecosystem of zero trust. And so, yes, it's I guess I'd recommend starting there. It's a lot to cover, but as far as Cloudflare goes, what I am most excited about as an investor is threefold. It is Workers, the edge network itself with the edge compute, and the fact that you can control have edge compute, but also control how network flows across the entirety of the globe. And upon that, they built a cybersecurity solution, kind of mimicking what Zscaler does, that is all around zero trust access of your remote mimicking what Zscaler does, that is all around zero trust access of your remote workforce to talk to internal services as well as external SaaS services. And then beyond that, they're greatly expanding their networking capabilities around what's called SASE networks, which is kind of tying zero trust into networking as a service, and so that they can kind of serve as the backbone for enterprise networks. Um, and so cybersecurity really encompasses, both the zero trust aspect and the SASE network aspect, but also Workers. They have to be secure run.
Hey,
Kind of the
Hey,
underpinning of the
Muji.
company is to be a cybersecurity company. Yeah.
Thanks for hosting this call. Really appreciate it. My call is really more focused on the longer term. When Cloudflare, IPO'd in 2019, it was primarily focused on servicing the network infrastructure market, with, a TAM of, I guess, 30 billion. And since then, it's pivoted a little bit. It's brought in new products and functionality such as Teams, Workers, Cloudflare One, that have more than doubled the TAM. It could continue, to grow into serviceless computing, IoT, 5G. And where do you think that, additional areas of growth are in the future? And I know the company has included a slide, last quarter that talks about, new areas of growth. But do you think that,
Yes.
that they're, that one of these areas is especially interesting? And what's your outlook longer term?
So yes, it's all three of the areas I just mentioned. It's Workers they can scale the compute platform in and of itself as a development environment, and so that customers can be building interesting things there as well as themselves. And then it's that zero trust aspect is another area they can scale, managing all the users. And then the SASE networks, which is really what they added to the TAM calculation in their latest investor presentation that you were referring to, where their TAM started shooting through the roof, is that they're solely adding in, kind of taking over the enterprise network as a service market. They are not giving any TAM for the workers because it's kind of a giant question mark, right?
Right, that's right.
It's up to the customer to find the solution there. And this is all kind of nascent space. And so I appreciate that they're not trying to assign some imaginary number to the worker space, that they're really grounded, I'd say, with the TAM, and they're just looking at the zero trust, their existing market of protecting apps, but also then protecting user traffic and protecting enterprise networks on top of it is really what's adding to the TAM right now. And so there's a lot of areas to explore here. And then there's the entire kind of icing on the cake of workers that we don't even know how much customers are going to solve with that. And then I'll even mention, it's not part of the equation yet, but there is a usage-based component to workers with their new model of Workers Unbound, where if customers are building things on workers, again, there's a very generous free model with workers, but as companies start having more and more problems solved by developing in the workers platform, I would expect that usage revenue would also kick in there too.
Yep, that makes a lot of sense. And just second question, last one is, understanding the leverage of the operating platform. So, looking at 2018, operating expenses as a percentage of revenue, operating margins were negative 30%, S&M was 48, R&D was 27, G&A was 31. And since then, it's come in to the point where, now, operating expense is, sales and marketing is still 46, but R&D is 21 and G&A is 18. Where do you see like operating expenses going forward? And, where, because I'm trying to forecast free cash flow going out 2023.
I have a question.
Sorry, I had some trouble with my speaker. But just said.
So sorry, no, you're here. So and crypto, can you mute please? Someone else is speaking. I'm not really one to break out the specific trends in the operating expenses. I tend to lump them all together into the total, but they're clearly amassing a lot of sales and marketing right now. And so it's about, hold on, I'm removing the disruptive speaker. It's all about buffering that enterprise sales force. And they were very clear on the call that as long as they continue to see such great ROI from spending on sales and marketing, they're going to continue to. But you can expect the reverse then when that isn't true, and they can then constrict and figure out where they want to land the balance of sales and marketing versus R&D. So it's not particularly a concern.
Right. On the Investor Day slides in February, on February 12th, they had this really great slide that shows sales and marketing going from 46 this past year down to 27, 29. They call it long-term model. I'm not sure if long-term is a year from now, 2 years from now, 5 years from now. And they have R&D falling, from 21 to 18 to 20. Obviously, they need to reinvest in the business, but G&A falls to 8 to 10. So that kind of leads to a long-term non-GAAP operating margin of 20%. I was trying to understand, like what year that long-term, operating margin is realized. Obviously, it's impossible to know for sure, but just want to hear your thoughts on it.
Yeah, it's a great question. Again, I was highly encouraged by the massive swing in margins. That just reiterates that there's levers they can pull internally in terms of how much things cost. And so uh, where ultimately those margins are going to land, um, I don't, I'm not projecting, but what you are projecting sounds pretty reasonable. It's uh, it's an interesting platform that is still in a phase of growth that I'm just not concerned about, I guess, where that margin's going to land. I'd like them to continue to amass all the customers right now and continue to spend on sales and marketing in order to do so.
Absolutely,
So
absolutely.
I was actually pretty surprised that they went so strongly into positive cash flow margin. So
Yeah, I was really
something
happy to
else
see
in
that.
there is something else in that mix is they're really applying a lot of leverage. I thought actually that just to take a slight side track, one of the really interesting uh, mentions in there was the flexibility their architecture allows. And they admitted for the first time I've heard that they're running ARM chips in their infrastructure. And I guess for the non-technical, it really just means they aren't dependent on a single kind of computer chip, of which there's varying shortages of at any given moment. And I thought that pretty interesting that they've got a lot of flexibility about when they can buy new infrastructure, to continue to expand their points of presence. So they seem like their internal architecture and the infrastructure they build it upon. I really liked that glimpse into the flexibility of it. So, Wolf, it sounded like you had a question.
Yeah, real quick. So I've been definitely enjoying this and listening to a couple things going on because I was also on a work call. But I wanted to know if you talked a little bit about Net's or Cloudflare's management team and just your research, because I know that's something that's pretty important to a lot of people. It's something which, when I first got into investing, I didn't realize the amount of importance to it. And now that I'm, running my own startup, I kind of see that the management team is everything. What's your thoughts on their management team? Any concerns in those areas?
No concerns at all. Obviously, we're dealing with two of the original three founders. It's a pretty sad story about the third founder that was the CTO, basically, and really the architect of all their initial infrastructure. Um, pretty impressed with a lot of things about management. And so, as well as then the current CTO that they got several years back. Um, I just in how this company innovates and continues to innovate on their product line. And they were talking, Matthew was talking about it on the call today, about how they're a kind of move fast, innovate quickly sort of company. Get the product out there, ask the customer questions about what they like and don't like, and iterate from there, improve the product from there. I love that from you know, I'm a developer myself, and I love to hear that style of product movement. And we can look at some of their competitors and see the exact opposite of that. And so I think you really do see the effects of how that kind of culture of innovation can really drive success. And then I would kind of splinter that a little bit with how wide the breadth of their platform is and how some of these innovations coming out of their ETI lab, which is their a division of their R&D that's really driving kind of the next gen of where they're going with this stuff. What emerged out of that was the workers platform that they ended up building all of the other stuff on top of, and then sold that as a product line. And so just the way that they've evolved as a platform is extremely impressive, driven by those two founders plus John, the current CTO, and it's pretty impressive all around.
Awesome. Thank you. Thank you for that. And then my one other question, which is, after I look at management, I also like to look at the competition and just kind of your take on them versus Fastly.
Well, speaking of management, there's a wide difference right there. The original architects, the original founder and main person behind the company stepped back into the architecture role. It's taken 3 years to come out with a product line that's still not GA, fully in production. The CRO was fired a while back, and the CEO covered for him for several quarters. The CTO was probably just fired. Like, talk about management turmoil going on. And then an inexperienced person was put in the role of CEO. And I think you're seeing the lasting effects of that in the performance of the company. So it's pretty wide. Just in talking about management on one side, it's like the complete opposite on the other side.
Absolutely.
But I guess your question is more around product comparison.
Yeah, product and specifically who's going to is there room for both to be successful in this sector, or is one of them just going to kind of crush the other?
Oh, certainly room in edge compute as a platform, but I find Cloudflare doing way more interesting things by the things they're building on top of it, which is entering the zero trust market, entering the SASE network markets, and absolutely they'll make an impact there. And they're not competing against Fastly in that regard at all. And they actually mentioned today on the call that they are not really a competitor to Fastly, that they don't see Fastly in deals. So Fastly is pretty firmly in the CDN space. They were crowing in a PR that they put out recently about how they just invented this new product on their compute at edge platform. That's the equivalent of Workers. And spent 2/3 of the PR talking about how great it was to develop a product on their own platform. But here, compared to a company that created that Workers platform, started it at the same time, released it 2.5+ years ago, and has been building products that are now contributing to the top line on it the entire last 2.5 years. And so it's just really marked difference in companies that is just keeps kind of coming to the forefront. It's weird comparing these companies and seeing this like vast difference in execution. It was a completely interesting point that came out of the call today when the CEO said that Fastly really isn't a competitor. They don't see him in deals. He really pivoted to that they're not thinking small. They don't think of Fastly as a competitor at all because they're not looking at, hey, we've got edge compute development platform and you've got edge compute development platform. I have the feeling that Cloudflare is looking at AWS as a competitor. They're looking at something large. They want to be a massive compute space. They want interesting applications to be built on Workers that are solving real problems. I think that he hinted that he'd love to see some $1 billion company get developed by a single person on the Workers platform. Like that's the goal, is to have this massive, next generation of cloud is the way he's thinking of the company, not just the small part that's the development platform. So really interesting insight there from the call.
That's awesome. Thank you for sharing that, Muji.
Yeah, well, thanks. Let's take a few other questions.
I do have one other, if that's okay.
Sure.
And that is, I'm still learning about this area of the industry within the cloud and everything. And what's the overlap with something like AWS in this area? Where does that come into the picture of kind of like cloud, not just versus Fastly, but versus like an Amazon? Is Amazon really in this same area? Are they kind of pursuing similar things? Might they, if they're not already?
So it's interesting to think the edge network is a very different paradigm than core cloud, and so and that's it's interesting to think about, but that's probably their biggest ultimate competition is core cloud. Ultimately, what's going to happen is developers and companies start solving their problems by developing on workers. Is that they need to, the big question with workers in general and edge serverless is you have to figure out, each customer has to figure out on their own what the solution is about what should run where. Where is it most cost effective to be running something? Is it edge versus cloud? And then there's other ramifications on top of that. Do they need low latency? What's the use case? Is it more applicable to be in one location versus the other? That's going to be the competition, is what's most appropriate for core cloud versus what's appropriate for edge as that becomes more and more of a development platform. All the other stuff they're doing, zero trust, SASE networks, is not being done by the major cloud providers. And really edge compute in general is not being done by the cloud providers. It's too, they want to encourage everything to be centralized in their cloud. And so, ultimately they might enter that portion of the market, but I don't see them as anything to worry about in the long term, really.
Cool. Awesome. Thank you.
Hey, Muji. Thanks for doing this again. It's super informative. So I had a question about sort of these secular trends that we're seeing, like AR, VR, and sort of cloud gaming. Do you see these as tailwinds for Cloudflare, or are these use cases not really applicable to what Cloudflare's core competency is?
Ultimately, I do see that they relate, if only because I think edge compute, because it is so low latency, the way I like to personally think about edge compute is that it's a large computer very near the end devices. So it's able to do compute, it's able to route network traffic just basically one hop away from your ISP. And so I do think there's applicability to AR, VR, maybe not until 5G is in place, so that the bandwidth between like the cell tower and phones or homes goes up significantly. But I think when you do, I think AR, VR would be a potential industry that benefits from edge compute, because you could be doing kind of those heavy calculations and really be transmitting those large files that you need for AR, VR in a much faster way. So I do think it's on the list of potential things that could improve from edge compute. When that will be, who knows?
Thank you. The sort of follow-up question that I had is, where are kind of the sort of lines drawn around what's possible in edge compute today? And is a reason that I, as a developer, would just not want to use edge compute today for anything is because it's just cost prohibitive?
No, it's the exact opposite. It's actually quite easy and cheap for you to use edge compute, and especially with Cloudflare, they have such a generous free tier that you can actually run quite a lot of compute and traffic without paying a thing. And so actually I think it's quite cheap to go to the edge. But it kind of goes back to the point I was making before. It's really up to the individual use case about what's appropriate for core cloud versus edge. I absolutely do see entire applications existing on the edge, that there is not even a core cloud component. And so I think it's a pretty compelling place to look right now. If you're a modern day developer, I would look if you could go edge first at this point. It's a great time to do that. Hopefully that answered your question.
Yep, thank you.
Thank you. Let's take one from Ernest.
Hi, Muji. Thanks for the wonderful call. I've got two questions for you. If you look at the Cloudflare 10K and you look at their products, I mean, they've got their different categories. They've got external facing, internal facing, developer based solutions, and consumer. What would be your guess of how the revenue splits across those four areas?
Sorry, can you repeat that? Of what across the area?
How the revenue is divided in those four areas. I know they don't disclose it, but what is your feeling of what that makeup is?
Well, that's a pretty interesting question. So, again, CFO is extremely clear. They aren't and will never, or at least for the foreseeable future, break out by product. And so they kind of look at their platform as the holistic whole, and they're not interested in breaking out exactly what one revenue stream is versus another to the public. But there's what they like to do is basically present themselves as a platform that has a menu of options about what a enterprise needs in terms of solution. Are you just looking to protect your web app, which is the kind of entry level need if you're approaching Cloudflare and kind of where they started? Do you need DDoS protection? Are you under attack right now? They get a lot of people approaching them. They're actually under attack and need immediate assistance. I would guess that the app protection is clearly the bulk because that's been their core product line for a while now, which is DDoS protection, web application firewall, basically serving as the proxy between the world and your website. That's probably the bulk of it. But the way they price is that it's just tiers. And so it's kind of, I don't know what you would break out. Right now, certainly you could break out some of the new stuff like Teams is a separate price. They do have modules that they upsell into like bot management, Argo Tunnel or Argo, which is like routing your web traffic through their faster backbone versus the free tier. And so there are lots of little knobs, but I think it's probably pretty widely dispersed across all the product lines that you see, barring the new ones that are, Teams and is probably pretty low.
Okay.
Bot management is probably pretty low. But I think it's probably widely dispersed. And also, I think it's pretty widely dispersed around the globe. They're pretty 50-50 US versus international. And so I think it's a good mix across the entirety of the company.
What would you estimate their CDN exposure is? Is it very small?
It's probably. Again, it's just a benefit of being that proxy in between. It is one of the core features in their web app protection plan, and you really get it for free for the most part, just with the basic entry level paid, which is $20 a month, which is I use on my own blog, and it just sits over your web app and caches all the pages for you.
Okay.
They're not you can program against it. They're not maybe as highly customizable as something like Fastly, but they're really looking way beyond CDN market, and it's I guess my guess is it's probably pretty low in the mix in terms of certainly it's widely used. Does it contribute to revenue as a separate item? Probably not much.
Okay. And my last question for you is a typical enterprise customer, if you look at their spend on tech in general, what portion of their spend would go to Cloudflare? Would it be very small, like tiny?
Here I am talking to myself. Sorry, I
Okay.
accidentally muted. Sorry, can you repeat that question, Ernest?
So what I was saying is, if you look at the typical customer, enterprise customer of Cloudflare, how much of their spend are they actually spending with Cloudflare? Is it a very small portion? What I'm trying to understand is, you know, how important. I know it's very important what Cloudflare does. It's critical to what they do, but as a percentage of a typical customer's, say, their network spend or whatever category it is, you know, is Cloudflare a big chunk or a very small chunk?
I would say compared to core cloud, a very small chunk.
Okay.
So if I were to guess, I'd guess
Yeah.
it's on the lower end, absolutely critical, but not. It's not the cost that's the worst cost on uh, the line items of any enterprise from all their vendors. That's probably core cloud. You know,
So I mean, if
infrastructure where you get nickel and
yeah,
dimed. For every second that you're running core infrastructure. With Amazon, you even
yeah,
get ingress and egress charges when you move data around and in and out of Amazon AWS's platform. And so I would say cloud is by far the biggest spend. And in fact, I
okay,
would think that customers spend less money going to Cloudflare than they did via the old paradigm of network hardware, buying appliances, having to maintain all this IT staff to maintain your network or WAN, like all that's
sure.
probably lowering the costs for
So,
enterprises.
so I guess what
But it
I'm
would
trying
really
to
depend on
say
the
is,
enterprise.
if Cloudflare increased their pricing by, say, 10 or 20%, it wouldn't really make a difference to most of the big corporate spenders.
Probably not.
Okay,
So
that's
and
good
it
to
would
know.
probably be at the enterprise level where they're pulling those levers, not the low end, because they really do like that funnel of free customers
Sure,
and
sure.
helping a wide variety of people. So I don't think you're going to see that at the menu you get on the web page. You're going to see that with the enterprise sales.
Sure. Thanks very much. I really appreciate it.
Yeah, we got a late stage capitalist,
Hey,
Mr. Bent Bullion.
yeah, how you doing? Um,
Greetings.
Thanks for doing this. I haven't had a chance to listen to the call yet, but one of the products that I've been excited about and was hoping might start contributing to revenue is the browser isolation product. It seems like a neat one because it's a huge market and I can charge a lot per user, and it kind of brings them into the desktop space in an interesting way. And I wondered if maybe they mentioned anything on the call or if you've done some other research that's begun to see what the adoption is. It seems like their edge compute gives them a special advantage in that of delivering browser isolation without hurting performance.
So I completely agree. It's pretty exciting of a product. I think it is again one of those levers we were just talking about where they could, either make it part of the platform, which would be the Teams platform, particular gateway, or maybe there's some upsell involved with it. So that's one of those levers they could pull. It's uh, and just a complete side note, I do have a premium service, and I just so happened to discuss this very thing in my first post today about zero trust on browser isolation. Uh, it is an interesting technology that it's not new. In fact, there were many cloud services that offered browser isolation, which is basically sitting between your workforce and the web apps that they're calling. You would sit in the middle as a proxy, and it would act as a sandbox for web applications and sites that you were going to in order to trap any kind of threats or malware at the sandbox. And then it would deliver a copy to the end user. And it's been interesting when they acquired S2, and it's now a released product, they really focused in the PR around that acquisition that this technology was especially exciting and even more exciting because they are an edge network. And so this is, again, something they built likely on top of Workers. I don't think we've gotten any clues to it, especially since it was acquired. But I'm guessing it's built on top of Workers, where basically, uh, you know, now you have the service that used to be kind of cloud-based and very slow. And once you introduce slowness to the process, because it's got to, render the web page and then redeliver it to the end user, it really ruins the experience of the entire thing, because the end user who's browsing the web, everything is just moving like molasses. And so the technology of the browser isolation is not delivering pixels, it's delivering vector graphics, if you know your technology terms, which is basically greatly reducing the size of data that they need to transmit from the browser isolation sandbox to the end device. So it's way less data, on top of the fact that then it's in the edge network and is, mere milliseconds from the end device. And so you've got way less data being delivered way faster. And I think this product has some legs because of it, that it can differentiate itself just from the fact it's so much faster. And so it'll be interesting to see how it goes. There was mention of it in the call. The CFO said that it was generating a lot of interest, and that was about it. But yeah, it'll be interesting to see. It's part of the gateway product, and I'm guessing it's an upsell. I haven't looked at the web page to see how they're selling it. I don't know if you have any information.
I know a bunch of the people there are using it as their full-time browser and have been, and say it works great. I haven't actually had a chance to try it yet.
Huh. Yeah, it's pretty exciting. That's the kind of thing where they could totally spin that out as a consumer process. If they dial in the architecture and figure out a way to scale it on the back end, that would be an amazing consumer product. If they could wrap it into Warp or something like that, that would be, just think of the amount of malware and really crappy redirections on websites to get you to click buttons that could all be solved with browser isolation. It's exactly what it's for. It's just trapping malware and, bad actors that are rerouting web apps. So I'd love to see that as a consumer product in particular. But I think I completely agree with you. It's probably got a lot of legs on the enterprise side, and I think it's, but one of the many things that are likely to appeal with enterprises when they evaluate things like Teams. Cool. Any other questions? All right, let's take one from about special situation. It's not speaking. Hopefully I didn't lose anyone. About Sarbamania.
Oh, hey, thanks, Muji. Thanks for letting me speak. First, I just wanted to thank you for your blog. Your blog is what inspired me to invest in net. So I just wanted to bring my statement and then I wanted to get your thoughts on it. Also, earlier you talked about the AWS, right? So I was also thinking the same. So so they have workers now. So they have double objects. They have whole suite of zero trust. They have SaaS network on top of it. They have Magic Transit and they have Argo, and finally they said like they are partnering with NVIDIA for edge compute. Um, it definitely seems like they are gunning for AWS, isn't it? So what's your thought? And also, do you think Fastly will catch up on this anytime soon?
Well, let's start there. No, no. Fastly is interested in being a CDN and an edge compute development platform. Uh, so no, they will not catch up. Um, but I do agree they are, and they basically said it out loud today on the call for the first time, that they are not. They said that they didn't look at Fastly as competition and really don't see them in deals that they're striving for. But they view AWS and the big cloud providers as the competition, and that's where their ultimate goal is to be a large platform with a lot of solutions like that. But just completely different architecture. They're not. It's not to say that they're trying to be core cloud in any way, shape, or form, but that's who they look to as the competition. So I thought that was pretty enlightening part of the call.
Right. And also, what do you think the direction with what they are taking on the edge side? And also, like today on the call, and earlier you mentioned that they mentioned they have a flexible architecture so that they are not dependent on any, let's say, ARM or the x86 architecture, right? So I was thinking here. I was thinking when I heard that they are definitely going after the cloud providers, not just they are definitely not playing the short game of just having the edge compute and developing the edge network. They are definitely going for clouds. Um, doesn't it seems like that's the way that they should be going? That isn't that how it should be? Shouldn't they be going?
I mean, right now, so the three pillars I'm tracking them on is workers usage, zero trust, and
Hmm.
SASE networks, eventually
Right.
becoming the enterprise backbone. And so I want to see them succeed at that. And really, that's not, besides edge compute, maybe, it's not really in the purview of core cloud. And so, uh, yeah, I just don't, I guess something I need to mull over more, thinking them in terms of competing against the cloud. I see them as very complementary to each other as far as core cloud versus edge networks. And again, it's really about each individual company finding the balance between those two platforms, about how and where they want to run things, the cost of it, the latency of it, what's applicable to each of those networks. And then magnified by the edge network that's transporting all of this information around the globe in a programmable way. It's just a different paradigm than core cloud, which is really about centralizing all the compute in one place. Yes, they have regions and availability zones, but it's really about centralizing everything when you're dealing with Amazon or Azure versus the really distributed nature of edge networks. So I think they look at them aspirationally as a competitor, not really against like a product competitor. It's just they're a development platform. Ultimately, services will be developed more and more on that platform. That ultimately there might be some competition there with core compute or core cloud, but that's to be determined.
Yeah, I like where it's heading. Also,
Yeah, me too.
I don't really have any other question. I just wanted to thank you. If anyone listening doesn't know, Muzi has a hyper growth with Triple H, I think, blog. If you want to dive into details on the details of the ACE. And also, I have seen that Matthew Prince himself has acknowledged how Muji is knowing their product roadmap. So you definitely want to check check his blog. Yeah, that's it. That's about it. Thank you.
Let's be fair. That was a joke. He
I,
did he did joke that I'm driving their product roadmap. I thought that was
I
pretty
mean,
funny.
I was reading your blog like I think maybe 6 or 8 months ago. At that time, they definitely did not have. They were working on Worker. They definitely did not have durable object. They haven't released the Magic Transit, I don't think, and they definitely haven't partnered with NVIDIA. I don't think their focus was with the A's. I don't think at that point. So maybe they are getting inspiration from your blog.
I think this is a company that is an innovation machine. And I'm just reading the tea leaves. I'm seeing where they are now. I don't even know where they're going to go in the future. I can project out of what I want to see success wise because I think it's going to translate to success as me an investor and ultimately their top line and their profitability. But yeah, it's a pretty exciting company to follow, I have to admit. Thanks for all that. And hopefully people do know I have a blog because this is my space. So hopefully most of you follow me, and I do have a blog, and I do have a premium service, as I just mentioned. It is not a cheap one, but I am trying to make a living at this now. And as you said, it's pretty rewarding to have public CEO acknowledge your work and basically give it a shout out. So I appreciate that from him. Great. Let's take another question. Special, did you ever show up? Special situation? I guess not, or we can't hear you. Let's get Todd up here. And how about Felipe after that? And I'm gonna kick or Ernest and Sarba, if you could leave the stage. I'm kind of running out of room. Thanks. How about Todd?
Hey, how are you?
Hello, sir.
I had a quick question for you. I wasn't sure if you already covered it or not. Sorry, I was late to the show. We were in a different thread and just chatting about the cash that's building up on the balance sheet of both Fastly and Cloudflare's got. They both are about 1.1 billion. I think Akamai's got 2.5 billion. Just curious if you have any thoughts of is that enough? How would you deploy that cash? And again, sorry if you already covered it.
I did not. And what they said about it, that was a specific question in Q&A on the earnings call. Um, in fact, the question was more geared for, what are you going to buy with all that cash that you got sitting there? The reason they have so much cash is their extremely conservative CFO. He, when the pandemic hit, he started hoarding cash, as best as possible. And, that's really buffered their balance sheet, clearly. And they're not interested in M&A. They were clear in a couple points in the earnings call that they really do prefer innovating themselves, not acquiring things. Now, they certainly have acquired things like the browser isolation technology I was talking about. So when they see a good fit with a company and an appropriate technology, they're not shy about M&A, but they prefer to develop from within. Just because of the kind of harmonious nature of that makes a more cohesive platform. What they're going to do with the cash, I don't know. Got me. Certainly, there's still a lot of infrastructure to come, continuing to expand the points of presence and the backbones, continuing to hire. But yeah, they got a lot of cash, and now they have positive cash flow. So unknown what the plans are for it. They weren't sharing, and I don't have much conjecture on it. And I think we lost Todd. Felipe, are you there?
Yeah, I'm here. Thank you. Hi.
Hello.
So, congratulations on your retirement and your pivot and your new career.
Well, thank you.
Looking forward to that. And quick question is, are any of the spend lines, do you have concern over any of the spend lines or ratio from their financials?
No. And thank you for the kudos, and I appreciate it if you're a premium member. Thanks for that. What I liked about the financials most was the 30-point plus improvement in cash flow margins and free cash flow margins. And so you just see those heavy signs of operational leverage and the levers that they can pull internally to do more with less. Now, clearly, they're spending a lot on S&M, and they mentioned that they will continue to do so to bolster enterprise sales force. That seems to be going well. But yeah, I guess
Great. And then second
I'm
question.
pretty pleased with things on that front.
I don't know if they mentioned, but do they have any exposure risk to the chip shortages? Because that's actually come up on a lot of different industries and different quarterly results from different companies.
So I was talking about that earlier. That was a specific question. And that's where they mentioned that they have flexibility in their architecture, that they are chip neutral, that they can build their architecture around Intel or ARM. And they have ARM in production, which was slightly news. I know they've certainly discussed it before, but I don't think I've ever heard that they have ARM chips in their architecture. But basically, CEO was saying that that gives them such flexibility that they can really wait out, problems in the supply chain and take advantage of deals when things are cheaper. And so they have a lot of flexibility because of this.
Great. Thank you very much.
Yeah, they explicitly mentioned it. Cool. Here, there's a couple other people questioning. Let me get a couple up. How about Andres and fourth turning? And then I got to go in about 15. Hey.
Thanks for taking my question. I'm not sure if you're familiar with Cloudflare's involvement with IPFS and their intent to be a gateway for it. Curious if you have any kind of like futurist or technologist thoughts as to how Cloudflare might be targeting a place in Web3 and how they might be able to monetize involvement with IPFS.
I don't have much opinion yet. So that's something to mull going forward, I think.
Yeah. No worries. And maybe just a tangent question. It's cool if you don't. This may be off kilter a bit. Do you anticipate or think IPFS might materially disrupt or modify the CDN or edge computing space in a real way as it kind of proliferates and grows? Do you think Filecoin might become, and IPFS might become an actual, sort of disruption to the hyperscalers eventually? Your thoughts on that? I mean, Cloudflare would probably have a place in that if it were to happen.
Yes, the latter part. But again, it's just like not a space I'm that up on.
Okay.
But I think this company is pretty well situated for things like that. Like there was a lot of questions around several months ago. I was talking to a Tesla fanatic that was really all into Starlink and kind of what it represented in terms of like it could take the entire backbone of the internet into space and be a lot more efficient and faster. Yeah. And it's just, I think this is a well-situated company that can really roll with the punches in terms of like what's, how compute is done, how traffic is done. So
that
I don't have any worries longer term, but I'm just not up on that.
Yeah, that's kind of, I view them as a call option on a lot of unique stuff like that, God knows how it develops, but if it does, I just foresee them having a big spot in it. Like their IPFS involvement, I thought was really, really cool. And kind of just the forward-looking, forward-thinking stuff that you just come to expect out of this management team. That's all I got. I really appreciate you doing this, and thanks so much for the time.
Yeah, thanks. I'm going to take a quick question from Andre, and then Deval, I wanted to hear from him. He sat in on the Roku call, and I wouldn't mind hearing a quick update on Roku.
Hi,
Andre, your question.
Yes, hi. Thanks for taking our questions. A few weeks ago, Dish and AWS announced an alliance to deploy a 5G network in Las Vegas, which apparently has more a commercial rather than end-user focus. And this is an area which sounds very interesting for edge computing platforms such as Cloudflare, but I haven't found much material on that. Do you think it's an interesting market? or what are the implications for Cloudflare in the long run in that space?
Well, ultimately, I think they're very well positioned for 5G because they are uh, the kind of one hop away from the ISPs, and that's an improvement at the ISP level or the cellular tower level to really massively increase the bandwidth. And I think that is really going to drive a migration to edge compute because you've got such massive amounts of bandwidth that you need things handling logic at the edge and being able to know where to route information as it comes in, because there's going to be so much information kind of generated from endpoints out in the wild that's moving inward into the internet rather than kind of the consumption model of where I'm on YouTube and it's being information pushed out to me. It's really flipping the directional flow of how internet traffic might be done. I have the feeling, that's kind of what drives the whole thesis around 5G and IoT. But I think Cloudflare is pretty well situated.
All right, Ben. Thanks for answering, and best of success in your new stage. Thanks.
Well, thank you. Thanks. So Deval, you said you had to go, but Deval and I exchanged a deal where he would listen to Roku and I would listen to Net. But I'd love to hear any highlights that you had before you go.
Sure. So, first of all, many congratulations on your premium service. That's awesome. So, the first post came today, and I was planning to kind of go through it, but it was too long. So, I will have to wait for to read it, right? So,
Oh, come
coming to
on. Wait a second. I normally write like 45-minute War and Peace length epics. And I think this
still
only came in at like 12 minutes. So,
too much to ingest, right? So,
this time at least I had pretty pictures. There's a lot of
yes,
pictures in there.
yes. Uh, so coming to Roku, like I have started using the sheet which Stock Novice he shared his template right from the FinFit Summit, and that kind of has everything in terms of like snapshot, right? So basically, I have pulled in the numbers starting from 2018 till the current quarter, and the revenues, right? So this quarter revenue 574.2 million, that has exceeded what we saw in Q3 of 2020, which happened to be a big quarter in terms of the revenue growth, right? So Q3 2020 we saw like 73% revenue growth, Q1 2021 79%. So this
Excellent.
was definitely one of the great quarters that Roku has posted ever, right? So one thing that I would want to highlight here is the platform revenue and the player revenue, right? So first time ever, like since 2018, the platform revenue has gone above 80% in terms of percentage of total revenues. That in comparison, like if I have to put the raw numbers, like the player revenue, it was still like $107 million compared to last year's 88. But at that point, like the percentage of total revenues is still declining with the player revenues, right? So that was pretty interesting. And the gross profit, right? So gross profit grew like 131%. That was phenomenal
Wow.
because, like, yeah, so the first time ever more than 100%. So the last quarter, like Q4 2020, Q4 is relatively like strong quarters for ad tech in general. Q4 2020, the growth in gross profit was 89% compared to right now we have like 131%. So that was like phenomenal. And again, like the platform gross profit was what kind of tilted in favor, was like 138% in platform gross profit versus player gross profit was 41%. Um, accounts, again, active accounts grow like 54 million. and that was like 34% growth. And streaming hours definitely like growing. So streaming hours went to Q1 was 18 billion in streaming hours, which was like 48% increase over the last year's quarter. And the ARPU has been steadily increasing. So that is average revenue per user. So Q for 2020, it was in $28 range. Right now, it's in $32 range. So comparison to Q1 of 2020, it's a 32% growth in that numbers, right? So
Wow.
overall, like a fantastic quarter. And certain highlights that I kind of found, specifically like they were talking about, say, international growth. So they gained share internationally. They are number one in the US, number one in Canada, still number two in Mexico, but they are still gaining market share there. On the Roku TV platform, they saw that the advertisers are increasing the spend. And on the Roku channel, right, that's where that was one of the highlights where they mentioned that like direct to consumer apps on the Roku platform, right? They grew more than twice that of the direct to consumer apps, so Roku channel, right? So that was a highlight for me. And account reach and streaming hours definitely like a huge uptick. It doubled. And other notes on the ads front, right? So they acquired Nielsen's ACR, which is the automatic content recognition, and DAI, which is dynamic ad insertion. So they are integrating those into their platform, and they fully completed that acquisition in April. With the automatic content recognition, like there was a question on privacy specifically with things going on with the iOS 14.5, like the IDFA changes and the third party cookie changes. Now with Roku, things are very different because it has the relationships with the consumers, like direct relationships with the consumers, and basically what they have is something called a first party data, not a third party data, right? So first party data, direct information about the consumers. And basically talking on privacy, like they were talking like how they would do like ACR, and how the privacy would impact that. And basically, what they mentioned was they ask the user if they want to participate in the ACR to kind of get personalized recommendations to them. And they are seeing a huge amount of success with the adoption of people opting in with that ACR prompts, right? So that is great on terms of like ads, because that's what people want to see. Where people are opting in. The advertisers want to see that more the number of opt-ins, better it is for the advertisers, right? So that's what were my highlights. And the other thing that they did in the past quarter was they launched the brand studio. Again, like that's innovation in terms of basically the way ads are shown to the end users. And they are going to innovate on top of what we see like traditional video ads, like the 30-second slots and the 60-second TV ad spots. So that was one thing that kind of was very important, and we'll see more adoption, because now people have, like the marketers have a lot of chance to innovate on their platform in terms of telling the same story in a very different way. So those were my highlights from Roku's earnings today.
Wow, thanks. Next of all, for those not aware, he is in the ad tech space a little bit and quite knowledgeable about these things. And has a great, I don't know if it's your pinned tweet, but you had a great tweet thread kind of explaining the dynamics of ad tech versus sell side versus buy side, and kind of how it all is structured. That was super helpful. So great. I super appreciate all that. I look forward to diving into those numbers myself. Uh, so thanks, Deval.
Yeah, absolutely.
Do you own Cloudflare as well?
Yes, I do.
Nice.
I own
Well,
Fastly
or
as
not
well.
nice. Depends on when you bought it. But oh, and you own Fastly as well?
Yep. More
What about
Cloudflare
that
than
one?
Fastly, but so Felipe, right? He was one of the people who I talked to because he was working at Cloudflare at that time, and we had a lot of discussions on like how was Cloudflare better than Fastly, and that's where like I was like, okay, let me just start a position in Cloudflare, and after like reading your stuff and things like that, I kind of build that conviction, and now I have more Cloudflare than Fastly. So yeah.
Well, that's good. The or at least for your pocketbook. The one thing I just can't reiterate enough is if there's really almost cult-like devotion to Fastly, uh, and certainly it gets argumentative when you compare the companies on Twitter anyway. But as a technology investor and have been for decades, it's just important to realize that the best technology doesn't always win. First off, in the marketplace, but the best technology has to be paired with a proper operations to sell it. So you need to make sure your companies have both sides of the coin. So you can be out there building, the best thing in the world, but if you can't sell it, if it's not monetizable, if it's not a good fit for customers, it's not going to sell. And so you really need both halves of the equation. And the frustration I have with Fastly is that their product pace is extremely slow, glacially slow. But I have problems with management and their lack of focus on customer growth. It's very clear that customers aren't important to them until this recent quarter. That was actually one of the bright lights in their earnings this week. That obviously they plummeted after. But one of the positives is that the net adds for customers was incredibly strong compared to their past. But the quarter before, their customer growth fell to a third of what it had been the prior two quarters, just in terms of net new ads. And so there was no sales momentum. And they've kind of been like that for a year. And I got pretty frustrated with the new CEO because of it. So anyway, thanks, Deval, for all that. My family is not home yet, so I do have a couple more minutes. Let's take a couple more questions. How about Rocky and then Kinton after that? Wait for them to connect. Hey, Rocky.
Hey, Muji. Hi, how are you?
Good. Hello.
Hi, thanks for doing this, Muji. This is very informative. Actually, I just wanted to chime into something which I think Ernest asked about that how much the Cloudflare bill is compared to the overall IT spending for a business. I can take an example of a retail business, online e-commerce kind of business, where I had to do this, I think, a year ago. There, this client of mine, you can say roughly have 300-400 million pounds of online business. Their IT spending possibly in the licensing and the resources, including maybe in 10-12 million pound range. And currently, when we look at basically when we try to get some quotes from Cloudflare on it, our bandwidth users and all that were actually even their minimum bucket, and it was $5,000 a month, right? So we're talking about $60,000 a year in the
Wow.
total spend of like 12 million pounds. So
Holy
if I
cow.
yeah, I'm not
So
sure if
much
it
cheaper.
yeah, I'm not sure if it gives us actually some sort of an indication of because I think his question was how much it is as part of the total budget is. So it's not much. It's very, very tiny. In fact, I think we had to stick to the $5,000 bucket because the sales guy said this is their lowest bucket possible, and this is for a business who is doing 400 million pound online. It's not a small business. So it's a
That's
tiny,
amazing.
tiny. It's a tiny, tiny. Yeah.
Yeah, I mean, just as another comparison, the one thing I have compared is the cost of their Teams product versus Zscaler, and it's pretty much along those same lines. It was I think it was 100 users. I don't remember the exact user count I had, but it was $7,000 a year versus $50,000 a year between the two platforms for Zero Trust
Interesting.
and Secure Web Gateway. So they are not an expensive platform, and they're, as they talked about on the earnings call, they're really positioning themselves to have that menu of options to really apply to all the use cases that their customer might have in one platform.
Yeah.
So great to hear that you basically slashed your
Yeah, and I have,
spend so much.
yeah, I have, I think some more comments to make. Muji, maybe you are aware of this. So some of the clients in the e-commerce space, especially when it comes to the Salesforce Commerce Cloud, which is one of the commerce cloud, the commerce platform, the Cloudflare comes as part of embedded in the SaaS offering, right? So you don't pay anything extra for your CDN offering. It's part of your GMV calculation to Salesforce. Salesforce pays for it. The one of the big disadvantage of that kind of setup is that you can only use basic CDN capabilities, but can't use like workers or any of the advanced feature of the Cloudflare. And if you wanted to do that, you'll have to go and set up a direct relationship with Cloudflare and pay them directly. And you need to have the technical maturity to actually adopt these features, right? But what I'm observing is the some of the Salesforce Commerce Cloud client, with the move to the headless and microservices, actually now trying to break that big SaaS monolithic, and now possibly going where they said, okay, I may run my commerce engine on Salesforce, but I still take my front end out, host it myself, have more CDN capabilities. Especially, I think now some of the A/B testing use cases are moving to edge and things like that. And they currently are on the Salesforce structure architecture. They can't use the workers and things like that, right? So they are going the direction, which will mean more and more clients for the Cloudflare in the e-commerce environment, which were typically tied to the Salesforce offering, but now they will have to have a direct contract with this with the Cloudflare going forward if they want to use this advanced feature. So I thought I'll just add that.
Wow, excellent, Rocky. I appreciate all those insights. It's great stuff.
Yeah.
Always good to hear from the users of said platform. You've got so much experience with the
Yeah, I actually
usage
have
and pricing of it.
I have one more odd experience, which some of my clients are really big client. I think you're talking about really big, okay? And they seems to have multi-CDN strategy, and Muji, possibly you come across this in your experience. So they will work with Cloudflare, Fastly, and bunch of CDN provider at the same time. And sometimes they do this for just commercial leverage, and sometimes they just don't want to build a dependency on one provider, like you will do with the AWS, GCP, and things like that, right? So now what happens in that architecture is that because you have multi-CDN strategy, now you'll have to work in terms of the feature set, you'll have to work with the lowest common denominator of the feature available across all the CDN providers you have. So Cloudflare may have a worker there, but if the Fastly does not have, then you can't use it, right? So it needs to have a lowest common denominator. Now that means you possibly have a situation you are paying for Cloudflare feature set, but you can't use it. Have you come across this situation, Mozi, with the clients, and how do they operate with it? Like, or is this how does the industry, especially for the very big client, like think of like Target, Walmart, that kind of client, they always have multi-CDN strategy.
Yes, for sure. I think where Cloudflare fits into that is that CDN is just kind of one product in their wide platform, and likely not the product that someone's going to the platform to initially engage with. It's kind of I wouldn't say afterthought, but it's just the kind of add-on that you go to because you're already using Cloudflare for something else. But is it used in multi-CDN strategies? Absolutely, and it's widely thought of as a major CDN, and as part of that industry, and it's probably why it tracks so closely to Fastly's earnings, I guess. But it's really a platform that goes way a beyond CDN. And so I don't study that aspect of it that much. There is an interesting tool that I've highlighted before on Twitter that is actually, interestingly enough, built on workers. I think it's called CDN Finder is the organization. It's a org that kind of tracks CDNs and the technologies and industry and where the major CDNs are. But it's got a tool that basically sits on workers and runs on workers in various cities and tracks the CDN usage that it can tell from major web pages like Airbnb, Ticketmaster, kind of massive web properties like that, to try to track what the usage is. So when there was a really big kind of battle between Fastly and Cloudflare, kind of last summer when Fastly was having all this massive tailwind from TikTok and having huge usage growth because it's a usage-driven company, this tool came about, and it was actually quite handy to look at the multi-CDN strategy. I'll have to see if I can dig up where that is and tweet it again. But it was basically a tool that tried as best as it could to distribute itself around the globe and I don't think it was global. It was the US and a handful of other countries, but it was trying to track that usage and then tracking it over time so that you could see how one company might start that is kind of adjusting that mix and those levers that you were talking about how to best deploy its application of which CDN is most appropriate at any given time.
Got
So
it.
it is,
Yeah.
but it's a very commoditized market, and it's
Yeah.
really the least interesting part of Cloudflare for me.
Yes, yes, yes. I agree. I agree. Yeah, yeah. Actually, I feel good. I look at your timeline. If I can look at this, or if you can tweet it. I also contribute, Muji, to a project called HTTP Archive or Web Almanac. I'm not sure that you heard of it. Where we contribute a tool called Webalizer, which tracks these technologies. But unfortunately, I think because of the resources, we only hit from the US, and we track roughly 7 million websites. So we published that annual insight. I think we published in December and we track the CDN users, but we don't track geographically. We track only from the US, but we do it for 7 million websites, 7 million top sites. It's part of a HTTP archive project, and I might actually ping you the link for the report, but it is not geographically distributed data collection there.
Yes, please. That's always pretty interesting.
Good.
So
Thanks,
yeah,
Muzi.
any kind of insights you can give. Yeah,
Good.
Rocky, thanks a lot.
Good.
That's
Good.
helpful.
Yes, sir. Yes.
I'll take a question from Kintan, but I got a couple that are very interrelated in DMs. Someone was asking what comes next after workers and teams, and the answer is absolutely SASE networks. And someone else asked me what the potential of SASE networks is. Those three things, workers, teams, which is their part of Cloudflare One, but really their zero trust kind of user access tracking system that I actually talked about in a post quite extensively today, the dynamics of how that works. And then SASE networks, which I am going to write about later this week, if any of you are premium members, or not later this week, but over the coming weeks, I'm going to talk about SASE networks, which is really enterprise networks as a service. And SASE networks combined with that zero trust capability is absolutely the most interesting market and place that they can scale. So with teams, they're amassing a lot of users and can scale up on users that are interconnecting through the Cloudflare network. But with SASE networks, they're interconnecting the networks themselves and or pockets of infrastructure that a company might maintain, and maintaining the security between them, which is crucial in today's very scattered landscape of how infrastructure is hosted. You've got on-premise infrastructure, you've got remote data centers, you might be a retail operation or have factories, or just scattered pockets of networks amongst your enterprise alone. But then you've got cloud infrastructure that you want to tie to. You can basically have zero trust over all of that. And then the users also having zero trust. There are so many ways to scale that technology and aka the profits that will emerge from that. That is absolutely how Cloudflare is going to grow from here, is amassing more and more users, traffic going through their platform, but more and more enterprise network traffic from all these disparate locations.